Ladies and gentlemen, good day and welcome to Q4 FY22 and FY22 earnings conference call of Prestige Estates Projects Limited, hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Samar Sarda from Axis Capital. Thank you, and over to you, sir.
Thank you, Margaret. Once again, welcome to you all. As always, we have the senior management from Prestige Estates Projects. I welcome Mr. Irfan Razak, Chairman, Venkat Narayan, the CEO, Amit, the CFO, and Mr. Sharma. I congratulate the Prestige teams for a great FY22 and also good luck for the recent set of launches in Mumbai from May 17th. Mr. Razak, over to you for your initial comments.
Thank you, Samar. As usual, our team has been batting hard and actually trying to create value to the company as well as to the stakeholders. And I think the highlight of 22 was the sales itself, operationally, and the collections, both crossing 10,000 crores and also 7,500 crores. Both are a record high. It's just not showing sales and not getting collections, so the collections also have been very good. And then the rest of the components, all asset classes have started doing well, including the hospitality, which was in a sort of a gray area or in stress mode for the last 2 years. It's really picked up and it's booming now. As also retail malls, of course, most of our malls are now with Blackstone. We hold only 15% stake in all these malls, whatever our share was. I'm happy to say even the Blackstone transaction has been concluded. And during this financial year, we also completed a stake sale to CPPIB, one of our office blocks. So all in all, we are in a very comfortable position in terms of liquidity and also doing a lot of work. And like you mentioned, Samar, on the Bombay launch, we had a good event on the 17th of May in Mumbai. And this has led to a lot of demand. We still haven't even started officially publicizing, but the sales have been extremely good. Response has been fantastic, and I think that will show in the results in the June quarter. So with this, I'll hand over to Venkat to add whatever else he wants to add, and then we can take the questions.
Thank you, sir. To get into a little bit of details and the project. This quarter, as Chairman said, it's been a fantastic quarter, both in terms of Q4 sales as well as year as a whole. The Q4 total new sales are at 3,268 crores, up by 77% year on year. We sold 4.85 million square feet of area overall. The collections for the Q4 were 2,461 crores. And we launched 5 million square feet of projects, commercial as well as residential. And we completed during the quarter almost 5 million square feet of projects. So year as a whole, if you look at operationally, total 10,382 crores of sales, up 90% year on year. And we sold overall 15 million square feet of area. And collections are at almost 7,500 crores. Up by 47% compared to the previous year. We launched all geographies that we operate in, 16.77 million square foot of projects during FY22, and we completed 14.26 million square foot of projects in all. And the contributors, catalysts for the sales have been primarily Prestige City that we launched at Sajapur Road in Bangalore, and the projects that we launched in Hyderabad. So these two led the momentum for the sales. Of course, all other projects also have contributed. In terms of financial parameters, again, it's been a good year. Year as a whole, if you look at we have total top line of 6,600 crores, EBITDA of 1,744 crores, and PAT of 1,214 crores. So EBITDA margins are at 26% and the PAT margins are at 18.41%. For this quarter, the top contributor for the revenue recognition has been Prestige Highfields in Hyderabad, which got completed and had a revenue contribution of over 1,000 crores. As Chairman said in the opening remarks, we have completed Blackstone Phase 2 transaction, but there was some money that was linked to CS in terms of demerger. Even that got done. That's during this quarter. And we have a balance to receive money of 250 crores, which should come in the next couple of weeks. So with that, the transaction is fully complete, whatever we have envisaged to be done in 2 phases, as informed earlier. And we will, in addition to whatever we have launched, we will have other launches coming up in Mumbai, which will update you as we go by, maybe at the end of next quarter. So far, whatever we have launched, the momentum has been good. That gives us the confidence to, take up the launch, whatever else is in the design and planning stage. And we're happy to say that, with the expansion to the Mumbai region and the NCR region, where we will have a launch maybe next quarter, even the contributions from those geographies will come in. We hope to consolidate at this level and, in fact, try and grow from the pre-sales number that we have achieved for this year. Now, overall spend in terms of construction this quarter has been 1,200 crores, 850 crores towards residential and 140 towards office, and 210 crores towards retail, capex and hospitality. And year as a whole, we have spent 4,373 crores on construction this year, almost 3,000 crores on a residential, 650 crores on commercial, and around 270 crores on retail, and 500 roughly on hospitality. So that's been the spend. The spend on hospitality is a little higher because last year we had the completion of JW Marriott at Golf Share, which is doing extremely well, and that got opened on March 5th. So there was a substantial spend towards that property during the year. So these are the spend numbers, and we've given operational and financial snapshot. With this brief, I would request Samar to open the forum for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on a touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Yes, sir. Sir, just a couple of questions. So normally your presentation has a pretty detailed guidance for the next year. So for the FY23, what would be the key guidance numbers in terms of total sales, your share, etc.?
From last year to this year, if you look at, we've registered 90% growth. The primary focus and objective this year would be to consolidate and ensure that we register sales upwards of 10,000 crores. We would have more or less clarity on the launches that we can do this year, because last year sales of 10,000 has come on the backdrop of 16 million square foot of plus launches. So launches are the key. We don't have too much of inventory in our hand right now. All put together at this momentum, what we have is 3-quarter inventory. So therefore, launches become key. We will be able to spell it out to you in detail, maybe the next quarter along with the results as to what sales guidance we can give, since it's going to be linked to our launches and we want to take stock of all approvals. For sure, upwards of 10,000 crores is what we have in mind.
Okay, sir. And sir, the second question is on the debt figure. So just trying to kind of get some more understanding. So your consolidated net debt is about 34 billion, but if I add the debt across different segments that you have disclosed, obviously the number is 56 billion. So is it a difference between gross and net, and does it mean that across the different businesses we have about 20 odd billion rupees of cash?
No, this is both. So there is a gross number and there is a number that comes for consolidation, and there is a net number. This is a combination of all three. So because the debt that we have borrowed in some of the SPVs, where there is other partners who are holding equal stake, we account as a joint venture company. Therefore, that debt doesn't come for consolidation. And whatever has come for consolidation, minus the cash that we hold, is the net debt.
Okay, so sir, how much is the cash number used for arriving at the net consolidated debt?
No. So specifically to answer that question that you are talking about is whatever the number that we have looked at minus cash, 2,200 crores that we hold.
Okay.
Net debt.
Okay. And sir, lastly, very quickly, I mean, would it be possible to share the balance capex for under construction office, retail, and hospitality projects?
Yes, we can. Give me a moment.
No, that is being got across the board. No?
Across various.
Yeah.
Just office, retail, and hospitality, sir.
Yeah. So office, retail, and hospitality all put together balance to spend. Our share is 2,317 crores.
2,370. And any rough breakup? I mean, half of it will be on office, or how to kind of break?
1,600 is on office. 170 is on retail, and
Okay.
40 roughly is on hospitality.
Sorry, sir, how much on hospitality?
540.
540, you said. Okay.
540.
Okay, great, sir. Yeah. Thanks, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Yeah, sir. Thanks for taking my question, and congrats on great year for company as a whole. My first question is on your debt number going ahead in, let's say, FY23. How much you envisage to spend on the capex and land developments? I mean, land acquisitions that we have done this year. What is the outflow that you are expecting for this year, and how should we look at the net debt trajectory this year?
We've always guided for the net debt of 0.5. Even in the previous quarter, when we were having interactions with you, we said our endeavor is to ensure that we stay around that number, and we'll be guided accordingly. We did just mention about the capex balance to spend 2,300 odd crores on commercial, retail, and hospitality. Yes, the other point that you have raised is what is that we are going to spend, we need to spend on the land bank. Yeah, that number I think would go up because of the scale at which now operations are happening. Earlier at 5,000 crores of pre-sales, we need to have X amount of raw material to launch the project. Now if we are to sustain 10,000 crores of top line and grow on that, the raw material that we need to have so that sales will be slightly higher. So therefore we need to get up to the next level. Having said that, we still endeavor to work towards and endeavor to keep our debt equity around 0.5.
Okay. And any update on the fund you were looking to raise to fund your residential land acquisitions? Any update you can provide on that? Yeah.
Yes. So on that front, we had made a significant improvement. We have identified LPs and investors who are going to participate. That leg has been frozen. Now it's about some modalities that we need to complete as to how much can be invested in each project and the governance mechanism and regulatory related stuff. Hopefully that should be done during this quarter, and next time when we have interaction that should be live and operational.
Okay. And lastly, on you also, I think you are also doing the Shiv Shahi redevelopment project in Mumbai. Any details on the launch, on the investments that need to make? Because what we know is that redevelopment has been stuck because of some issues with the erstwhile developer. So any update on that?
Did you mention Shiv Shahi?
Yeah, Shiv Shahi.
Okay. So the discussions are on right now. There are many loose ends. It's not just about us who are developer. It's about bank-related issues. It's about existing customers issues. It's about now plan and allocation of units to them. And all these aspects we are bringing to state. Step by step we are resolving. And hopefully by 30th June, everything should get concluded and we should be able to sign definitive documents.
Okay, so launch should be like 24 or even later than that? What?
No, launch should be, if all goes well, this fiscal. Maybe by December 22.
Okay, okay, great. Thank you. That's it from my side and all the best.
Thank you.
Thank you. The next question is from the line of Kunal Lakhan from CLSA. Please go ahead.
Yeah, hi. Good afternoon. My first question was on if you can give some color on the Mumbai residential launches, how they've done so far. And I had a particular question on Jasdan Classic. The West Tower there seems to have been sold out. So just any color on these projects individually, if you can share.
Thanks, Kunal. Irfan here. I'm really happy to stay after the launch that we had on the 17th. The momentum has been really good. The channel partners and our team has worked hard, including our publicity. Still hasn't yet started. Maybe it'll start this week. But the response has been tremendous. We have a target set for ourselves till June end, and I think we'll exceed that target, especially in TPCM Mumbai. And then the other one you talked about Jasdan. It's only a question of releasing which units when. Construction, of course, is going on at a good pace. So we want to bring it to some critical mass and get the interest. And I'm very, very sure we'll get some good numbers from there. Already the sales have picked up. It's not that West Tower is fully sold. That's not the story. But work is going on, and I think the sales team have a certain strategy how to handle that.
Yeah. Hello.
Could you hear?
Did you hear me, Kunal? Oh. Hello.
We lost his line, sir, so we'll move to the next question. The next question is from the line of Biplab Debarma from Antique Stock Broking. Please go ahead.
Sir, good morning, sir. Sir, first question is on the FY22. Congratulations on the great set of numbers. Sir, just wanting to know what are the top 3 projects in terms of sales booking and how much they contributed in FY22.
FY22, what contributed the maximum was TPCM Bangalore, Prestige City Bangalore. That is Sarjapur, and that has done amazing numbers. It continues to do good numbers, and it's got scale. It's a very large development, almost 160 odd acres, and quite a substantial inventory. But we thought that we'll sell this inventory over the next 5-7 years, but it just seems to have flown off the shelf. So that's the good news. Apart from that, we have projects in Hyderabad and also other projects which we launched in Bangalore, like the Primrose Hills. All have contributed well. And going forward, we have, like Venkat rightly said, we need to beef up and get some more launches. Of course, Bombay has been launched now. Bombay this fiscal will have a lot more launches. Apart from what 3 we've launched now, we've also got the Ocean Tower, which will happen in August, September. So that's how it is. And I believe all these will give us also good numbers.
Sir, my question was because I know that Prestige City, Sarjapur had a great response. So we're just wondering whether we can replicate that kind of, because that's a unique project. You got a from what we heard from you as well as from the channel tech, that it's a unique response and robust response. Okay, so in FY23, because one project contributing so much, so in FY23, that's why the question was asked, whether we can replicate similar kind of in other projects? Or
Yes, we can and we will, because Prestige City is continuing to be sold, as I said, in this fiscal. Plus now we've got TPCM, that is Mulund, Mumbai, and that is also now got its fancy and is selling very well. And like I said, now we are going to get sales from Mumbai. We have got a project which is fully ready to be launched in Noida, where there's a lot of interest. We're just waiting for the approval. The moment that approval comes, it gets launched. I see it happening. Now in Hyderabad, we've got some large development, some large land we've tied up. Even the planning process is on, and let the approvals come, we launch that. Apart from that, in Bengaluru itself, we can't afford to ignore Bengaluru. There are some 3-4 very large developments that we've tied up, which everything has happened. It's all in approval process, and even those will happen in this fiscal itself. Like we've got Lavender Fields, we've got Serenity Shores, as well as Park Grove. These are large developments, and these also will give us numbers. So there's a certain thought process strategy, and the whole idea is that we should and we must cross the current fiscal, whatever we've gone by numbers, and we can't slide backward. We are only looking at things going higher, not lower. And we are confident we'll cross it.
Okay, thank you, sir. So my second question is on the status of BKC 1 and 2. So where are they? And sir, what would be the outflow in terms of cost incurred plus loans and advances, total outflow till date in each of these projects, BKC 1 and 2?
A good question. It's BKC 1, 2 and Liberty Towers, that's in Mahalakshmi. All three are office projects totaling to almost 6 million square feet. All approvals are in place now. All premiums have been paid. In BKC 1, there's one CRZ approval that is awaited, and the meeting is fixed for June 6th. That's just about 2 weeks away from now, a week away from now. Once that gets done, I believe that we are on a good track. All these projects already, piling has started, work has started in all these three. The structuring is still happening. We are working out the structuring, working out the methodology, and also we are trying to see how we can have more reliance on equity than debt. So it's a work in progress. Can't spell out everything just now. Once something gets done, we'll let you know. But mostly these projects also, Venkat and the whole management, the whole idea is how to see that we use more equity than debt for these projects and see that they are produced quickly. And I'm very confident because of location and the design, these will get consumed faster. There is a lot of interest in both these projects.
Sir, did you say that BKC 1 project approval not received but work started?
No. All approvals are received. I can't start work without approval.
Yes, sir.
Only there's one portion where I need to get that CRZ, which will come in the month of June. So with that, we are fully through. And I've got the approval to start filing, so we've started the filing. All premiums also have been paid.
Okay, sir. So you have received all the approvals and work has started in BKC 1 and South Estate, right, sir?
Yes.
Thank you, sir. Yeah, that's all.
Thank you. The next question is from the line of Girish Chaudhary from Spark Capital Advisors. Please go ahead.
Yeah, hi. Thank you. Good morning. So firstly, if I look at your upcoming project list, if you can provide some more clarity on the Noida project, which is or around 3 million square feet, and Prestige Highline, Chennai, which is 4.5, and also the Park Grove project in Bangalore, which is 9 million square feet. Because outside of Mumbai, these projects appear to be large. So any clarity on approval, launches, micro market will be helpful.
Actually, Noida, our marketing suite, our show units are all fully ready. It's a bride ready to get married. We're just, because of the elections, the approvals got delayed. Hopefully, we should get the approvals in the next 60 days. The moment the approvals are in place and the RERA number is in place, there's a good inquiry. Like I said, this is for Bougainville in Noida. Then the other one is, you talked about Highline in Chennai. Yes, even that there was one or two regulatory issues which we have sorted out fully now. The plans have been redrawn to meet those regulatory issues, and hopefully the approvals also should fall in place in the next 2 months. With that, Highline is a large development in Chennai, and we don't have any other residential project of that size in Chennai, and I believe that also will give us good numbers only in this fiscal, because this will definitely launch this fiscal, inshallah. And then we've got Park Grove, even that is also work in progress. It's again a function of approval.
Okay. So Park Grove is more FY24 launch or
this fiscal only. It will all be, including Lavender Fields, which is again a large one. So all this will be this fiscal. We need to now really put effort and put in a lot of pressure to see that we get the approvals quickly. There is demand, and we need to see that we are able to satiate the demand and not miss it.
Got it. Secondly, if you can just give some outlook on your Hyderabad pipeline in terms of both the launches and then also the incremental business development.
Yeah, Hyderabad, we've also got this Neopolis land which we bought. The company bought that, and the plans have been drawn, and the land also has been registered to the company. And now the approval process is on. Even that, hopefully, we should be able to get the approval this quarter, but then the launch will happen only in the next quarter. And apart from that, we've tied up a large tract of land, almost 70 acres. And that also, we are going to again name it either the Prestige Falcon City or the Prestige City in Hyderabad. That's a large tract which will have high-rise apartments. There's going to be 1 million square feet retail mall as well as villas, and that, I believe, will be a huge number mover. Even that could be the third quarter of the year, because it's a large project. We need to spend a lot of time on the design. Design process is 50% through. And once it's done and land is already tied up, regulatory issues have to be sorted out. And I believe we should be good to launch in the last quarter of this year.
Got it. Thank you, sir, and all the very best for FY23.
Okay. Thank you.
Thank you. The next question is from the line of Kunal Lakhan from CLSA. Please go ahead.
Yeah, thanks for taking my question. Venkat, like a couple of weeks back, there was an article stating that you plan to invest about 4,500 crores in Mumbai, and it also said that you've spent about 1,000 crores already. Sorry, you have already spent about 4,500 crores, and you plan to spend 3,000 crores out. So if you can just give a breakup of this 4,500 crores that you spent in Mumbai.
It's the other way around. 3 spent 4.5. Anyway, I'll give you a breakup. It's the amount that we have invested for Mulund, the payment that we have made for NCLT, and Jesdan Classic, now it's 100% owned by us, the amount that we have incurred towards that, and BKC 1 and 2 projects there, and Prestige Liberty Towers, what we have paid, and Marine Lines project where we paid a little over 300 crores of money, and Jijamata Nagar, what we have incurred. So combination of all this.
Okay, that's 4.5.
No, I said what we have incurred overall put together 7,500. What we have incurred is around 3. 4.5 is what we have to incur.
Okay, and you mentioned that the balance capex is 2,370 crores, which is Prestige's share. This includes these projects, or?
No, see, in this, Kunal, I'll just summarize entire Mumbai for you so that we put things in perspective. Right now, we have 3 residential projects, that is Prestige City at Mulund, and Prestige Daffodils at Pali Hill, Prestige Jesdan Classic at Mahalakshmi, Baikula. So these are the 3 residential projects, all 3 have been launched. Now, we have got 3 commercial projects, which are 2 at BKC, and 1 at Mahalakshmi, Prestige Liberty Towers. In addition to these 6 projects, we have 3 in pipeline. That is, 1 is Prestige Ocean Towers at Marine Line. Prestige, we have not named the project at Shiv Shahi, which earlier I mentioned in the call, and project at Jijamata Nagar. So, except for Shiv Shahi, on account of everything, there's been outflow. So I gave a summary of outflow that we have incurred. Now, as far as 3 commercial projects is concerned, is the outflow that I said, capex projects outflow.
So the 1,600 crores of balance capex for office that you shared, does that include BKC 101, 2, and Liberty Towers?
Yes, it does.
In your share of capex. Okay.
Sorry, Kunal?
No, you mean your share of capex is included in that 1600 crores for these projects?
Yes.
Okay, sure. Great. Thanks a lot.
Thank you. The next question is from the line of Adidev Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, good afternoon, everyone. So first question is on this construction cost. Since some of our projects which we launched last year, we have sold a substantial portion of that. Considering the rise in construction costs, could you understand how it impacts you in terms of the ongoing projects, and for the new and upcoming launches, how are we looking at pricing? And if you could also quantify what is the price hikes we have taken across the portfolio in the last 12 months. That is the first question.
So as far as ongoing projects are concerned, we have not reached our budgets unless they are nearing completion, because there could be price fluctuations. We did provide some contingencies in the budget, so therefore we have not redone. If you notice, the prices have started coming down, and plus we have inventory in those. The prices of inventory, yes, have gone up a little. The price rise in the construction materials has been factored in the new launches in terms of increased pricing. So therefore, we believe that we should be able to maintain the margins that we had in mind at the time of launch of the project. And if the price rise were to continue, maybe when we come closer to the completion of the project, we'll see if there is going to be any impact.
But we are also proportionately
increasing the cost of the pricing of the inventory that we are holding, and also the pricing for the new launches.
The quantification in terms of rise in prices and rise in costs, any percentage you could share at a portfolio level?
Now, what happened is price did go up for just about a couple of months. Now again they've cooled off. Government has taken some good measures. Steel price again has dropped. Cement has dropped. And I believe that it will be a 7-8% overall if you look at the life cycle of a project. But whenever we do our budgeting and pricing, we always factor the 7-8% increase, because we are also cognizant of the fact that prices will never be stagnant. So when we do our selling price as well as our budgeting, this is already factored in. Only if there's some extraordinary rise like that happened for a couple of months, that we have to take that into our stride. And what we have done is suitably corrected our selling prices also. So I think net there won't be any big hit on the bottom line.
Only impact that we may have to look at, it would be because there is no like inventory realization higher cost into the capex project, that we will consider.
As which we give out. Hello. Yeah.
There's some discussion.
Hello.
Yes, we can hear.
Yeah. Sir, just a clarification on this slide 22, when you give the ongoing projects commercial, sir, sorry, on the next slide rather, slide 23, so it says here that our two BKC projects and the Mahalakshmi project commercial, the area is almost 10 million square feet, the TDA. So how do we, what is the conversion factor we should use to calculate the leasable area in these projects? Either for these projects or not?
Yeah. It includes the parking and everything.
So the question is for the gross to the, from this developable to leasable, what is the conversion factor we should be using across projects?
60%. 60% would be the number. 60 to 70% would be the number.
Number we should use, right, to arrive 60 to 70%.
Right, but 60 to 70%.
Fine, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, thank you very much and good afternoon, everyone. Venkat, first question is on fiscal 23 outlook. Just if you can give us a rough contours of what could be the collections versus what could be the construction spend.
So fiscal 23 outlook, we're very positive and optimistic. While Chairman was answering the earlier question, he mentioned the Prestige City at Bangalore has been a catalyst in achieving 10,000 crore benchmark. And the Prestige City as a concept now will be taken to other cities wherever we are doing the larger developments. So therefore, you saw the launch of the Prestige City at Mulund. Now we'll have one of it kind township coming up in Hyderabad, and we have a large project not named like that, but it's sizable in Chennai as well. So though we have had 90% growth compared to the previous year this fiscal, FY22 outlook is that we want to work towards bettering those numbers. Approvals are underway for many of the large developments. So we'll work towards that, and outlook is promising across the cities that we are present in. Now, the second question, the spend on the construction and the business development. Construction is based on the ongoing projects that we have done, but the business development per se, if you have to look at now, we need to have our land bank that is capable of giving us these kind of pre-sale numbers. So we may have to invest a little more on that front. We need to have that pipeline. If you look at our entire inventory, premium luxury completed, ongoing, everything put together is around 7,000 crores. That is now at the scale of operations is 3/4 inventory. So we are strategizing a plan now because now that we are done with our first set of launches in Mumbai, what should be the plan for Mumbai region? We're also looking at something in Pune now. And also NCR, we have one project that's about to get launched subject to approval, and we need to have that strategy for NCR region as well. On a business development front, there will be outlay, but as we said earlier, the way we are looking at doing a business development now through float one fund and make that fund buy the land and give for the scope for the development, so that the outlay will be minimal from Prestige Estates point of view to embark on those developments and the scale.
Yeah, thanks for this, Venkat. But are you sharing any numbers or rough estimates on the inflow versus outflow?
Inflow versus outflow for the next fiscal, or generally business development, what will be the outflow?
No, just for fiscal 23.
Fiscal 22, let me give you. Fiscal 22 on business development front, it's been high amount that we have spent in land, TDR, and stake buyback and refundable deposits all put together. We have had outflow of around 4,000 crores. We may have to spend between 2,500 to 3,000 crores at least towards the business development this year. Now, whether this amount will be spent by Prestige Estates or it will be spent by the fund that we are floating, and that fund will give for the development for Prestige, that clarity we will be able to give you once the fund is up and operational. Maybe the next quarter interaction that we are doing, we'll have a lot more clarity.
Okay, that's great. And likewise for construction, like you did 4,300 crores in fiscal 22. How do you see the run rate for fiscal 23?
Similar numbers, maybe slightly higher. 5,000 crores is the construction number. A lot of projects are getting completed, and the newly launched projects will not have as much spend in the first year of operation, because construction spend is not equally distributed between 3 years. A majority of that happens in the last year of the construction, because a lot of material being bought out.
Okay, and you had, if I'm not wrong, collections of 7,500 crores for fiscal 22. Where do you see this number in fiscal 23?
I think we will have constructions also. There will be improvement, because whatever the pre-sales that we have made from ongoing projects, that installments will kick in, and the new projects, the initial booking amount and installments also will start coming in. I think collection should be in the range of 7,500 to 8,500 crores.
Okay, great. Very clear. Thank you. And just on the gross debt, Venkat, that's on your slide number 9, where you give segment-wise debt buildup. So from Q3 to Q4, the number has moved from 4,100 crores to 5,600 crores. So just in one quarter, it's gone up by roughly 1,500 crores. So just, I mean, at the project level, what really is driving this, big change?
Excellent, Samir. Can you just, slide number 9 you are talking about?
Yeah, slide number 9. If you add up all the comps, commercial, resi, all of them, it works out to 5,600 crores. And in Q3, it was 4,100 crores. So just in 1 crore, the gross debt has moved up by 1,500.
This will be some of the payments that we have made towards the acquisition of projects. For example, 300 plus crores of money went to pay marine line. But some of this money that we have drawn is also sitting as cash. So the gross has gone up, but the money is lying with us. So that's why net remains same. 2,200 crores of money is with us.
Okay, but you will be making this is a project level drawdown, so you will be making these payments, so the cash will probably come down in a quarter or so.
Yeah, it will come down in the quarter or so, and maybe new projects will get added, because that's including ongoing capex, whatever we have, and new new office projects also will get added.
Okay, that's fine, Venkat. I'll take it separately. And one final question is just a broader macro question. People are a lot worried about interest rate upcycle. So, how do you see this impact on your business, whether it's home business, office business, if the rates are to move up 100, 200 basis points as you go forward?
200 basis points is slightly higher. If you were to go up by a little more, maybe equivalent to whatever it has increased, that much has been factored. 100 basis points increase will definitely affect the sentiments of the home buyers. But if it were to take one more or maybe two more at 25 basis points each, that is something I think should not affect. In fact, historically, if you look at it, there is an inflation and the inflation-linked interest rate hike. The best bet against inflation turned out to be investing in real estate, and there is a lot of traction even from the home buyer point of view, and they also know the fact that the home loans are taken for 10 years, 15 years. Even if they are started off taken at a lower interest rate, the increased rates will be applicable even for those guys. So it will get averaged out during this home loan tenure period. They are aware of that. It's mostly about starting at a lower level. Maybe the lower eligibilities to some extent because of the higher interest rate at the beginning may slightly get reduced. So we don't see that to be impacting so much, because there's a need for buying a home, and the COVID period in fact reiterated the necessity for having a home of their own. So we don't see much, but as far as the office and other capex are concerned, it will have some impact on yield on cost. But fortunately for us, that should not significantly affect, because we have, while doing a model, we have factored in slight changes in construction costs in terms of contingencies. We have factored in little change to interest rate. Most importantly, even the rents are going up, so that should get negated.
So Venkat, thanks for this. Just to complete the point, Prestige has done more secondary transactions on rental assets than anyone else. So just your thoughts, if the policy rates were to move up 100, 150 basis point, do you think the transaction value, which is cap rates, also move up in the secondary market? Your best guess. I know you don't have too much to sell anyways, but how would the market look at cap rates?
It will get factored in, but we don't have right now anything that we are selling substantially in the secondary market. That is something which we have sold. Even last year sales overall, if you look at, there's nothing that has come significantly from commercial. But to answer your question, will it get factored in? Yes, it will.
Okay, great. Thank you so much.
Thanks, Samir.
Thank you. Before we take the next question, we would like to remind our participants, you may press star and 1 to ask a question. The next question is from the line of Ashutosh Mittal from Axis Capital. Please go ahead.
Yeah. Thank you, sir. So what is the debt across the JV projects which does not get consolidated? And what is Prestige's share in that debt? Specifically, what is the debt on Ocean Towers, Liberty Towers 101 and Prestige City Mulund?
There are two projects debt that primarily has not come for consolidation. One is a company called Pandora, which has got 525 crores of debt. 50% is what we own. And there is other project which is hotel in Delhi, AeroCity, Bamboo, where we own 50%, and that has not come for consolidation. These two. Okay. And what is the investment that we have made in Marine Lines? So far, we have made investment of 325 crores in Marine Lines, and that project we should be able to launch in Q2. What else?
Yeah, that's it.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Hi, Venkat. Congratulations on a very strong year. So my first question is on the Mumbai sales. So now, put together all the three projects. So how much will be the total achieved by now?
Mumbai project sales. Sales,
Yeah.
as Mr. Irfan said earlier while answering, the momentum has been very good. The launch has been quantified in June. So we're compiling the numbers. Ideally, once the quarter is over, next quarter results will tell you the numbers. But there's a very good momentum, and especially Prestige City at Mulund is doing very well. And did you ask what's the pipeline for Mumbai next?
No, sir. So my question was for the full year as a whole, FY23. So can we expect like Mumbai to contribute close to about 3,000 crores of pre-sale for a year as a whole?
No, it should easily give us about 3,000 crores. That is our thing, maybe more. But as things stand and as things look for the financial year, though we've launched it only in the middle of this quarter, I think we should get those numbers pretty easily.
Okay. This is my second question was again on Mulund. So how much of, so we have taken some of the old area which was earlier being developed. So how much of sales will accrue on account of that to us? Like what will be the opening order book of the sales?
Yeah, I mean, that's a good question. See, at the moment, we are not counting those old sales, what have already happened. And if it's for accounting purposes, at some point of time, we'll also segregate and say, these are the new sales. These have come from because of the old sales historical. And of course, in terms of value, there'll be much, much less because those have been sold as historical numbers. Of course, we need to look at it and we need to see even collection comes from there. But whenever we declare our June results, we definitely, this is a point that I think Venkat and Amit also have to make a notice, segregate the numbers so that you also will know we're just not showing you some historical sale and saying it's already there. So I'm very confident now because till the launch didn't happen, we were not sure how the response will be. Now, once the response has been good, very confidently we can say that Mumbai also has accepted us.
Okay. In this last part, Venkat, on the business development for Mumbai, so if you can just walk us through how much has been the total GDV addition till now, including these three projects, and beyond that, how much do you think Mumbai has a potential for you in terms of GDV? So, because if I broadly work my numbers, it should be in excess of 20,000 crores. So if you can just walk us through like how much.
What?
So in my estimate, I think it's almost crossing 20,000 crores of GDV now. So with the Shiv Shahi and other projects. So can you help us like what is the total GDV according to you for the Mumbai project? Currently in hand and upcoming one.
No. So if you take Jijamata Nagar full potential that it has, we will be at around, I'm talking about residential alone.
Okay, yeah. Resi only I'm asking you, yeah.
So residential alone, we should be around 25,000 number.
Wow. And 3,000 annually could be a potential which we can do, like, because there's a huge number, so it's almost like your 8 years kind of inventory. So that means we'll be able to.
Being the first year, the momentum, this is what we are looking at, and the offering also is limited to these projects. That's a minimum number. Now, if you were to launch Prestige Ocean Towers at Marine Line, that's a different market altogether, micro market. That sales also will get added. And Shiv Shahi will be able to launch during this fiscal. Only Jijamata Nagar will not happen this year, and that may be year after next. So it's not that we'll be stagnant at 3,000 crores for us to apply 3,000 as a denominator. So as the offering increases and the pre-sales numbers also will go up.
Just one last thing on the total pre-sales last year of 10,000 odd. So how much of that was strata sales? Because I understand BKC there was some strata sale which was done. Similarly, I think in Bangalore. So if you can just break up that into how much was the commercial strata sale and how much was the pure resi?
All put together around 8.5%, 9% is the commercial strata sales. That's all is residential.
It's close to about 900 crores.
9,000, yeah. That is around 800 to 900 crores. That's all is residential.
And it's more to do with financing it more with equity rather than putting in debt. So it's more like a strategy where you want to fund the project through equity, as you said earlier.
Correct. This is correct.
Okay. Great, Venkat sir and Irfanji. Thank you and all the best. Sir.
Thank you very much. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you again for a very enthusiastic and insightful conference we had. As we said, we are always in a positive mindset, and you would have seen quarter on quarter, year on year, there has been positive stuff that we've been doing. And we will continue to do that. Your encouragement and participation is always required. And the whole team is working hard, and we are focused. And I believe things will only get better. With this, I'll ask Venkat to conclude.
Thank you, sir, and thanks everyone for the very active participation. And your inputs have been very good in re-engineering few things and evolving our business models and directionally looking at what all can we do. This we believe are the most exciting times, and our teams are geared up to capitalize on the opportunities and the consolidation theme that is playing out, and our expansion to various geographies is meeting with good response. So we're quite excited. In the next 3 years, we believe are going to be very defining, and we will do our best to capture and sustain the numbers that we're going to achieve. We look forward to your support, and thank you. And any of you having any questions post this call, please feel free to write to us, reach out to me or Amit. Thank you.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.